Yesterday I said gap higher and trade lower, but the setup said to go bullish. So, my opinion, does it really matter? Now this happens more often than anyone cares to admit, but what you do about it is pretty much the whole game. So we're going to look at what separates the wheat from the chaff, we're going to look at the bear setup that the swings have alerted me to, and we're going to take a look at the wall of wins again, because despite my opinion, we did make some money. So SVP, SP, put my teeth in. So the S&P overnight, we've got new all-time highs, and as I'm recording this, we are actually seeing the Dow futures just pump into new all-time highs. We're absolutely ripping in the pre-market already. Crude oil, again, was looking like it was turning around. That has fell off a cliff. Again, we'll have to just take the heat on that one, but literally in the last sort of 10-15 minutes, the market has turned around on the indexes and on crude oil. Everything else remains kind of neutral. Despite the new all-time highs, VIX is not really pushing lower down to those extreme lows, but for as low as we're going to get, I think, for the moment, again, it's not given us any clues that we can look into at this stage compared to when we were looking at it last week. So the S&P has fired off a bearish trade, as we can see here, tag and turn type of setup. One of the things to note here before we look at the expert advisor on the software is we are in this bullish extreme here, and all the data and all the research says that when that happens, we're in a strong trend. So it's not a case of we're again, traditionally this would be interpreted as overbought, but the research says, hold on a moment, whoa there, it's a strong trend, and that's what's reflected here in the expert advisor. So this is all automated, and it's looking at 30 plus factors in the background for me, based on all the research and over all the years. So yes, it has got a tag and turn setup. It's going to give you the setup, but it's going to let you know what the quality is. It's not great. It's suggesting that I should skip this. There's not enough data to actually provide an edge. So, there is a cautionary warning that, again, if you do take it, because what we can see is these tag and turns just push a little bit lower, but it's not going to get to the Bollinger Band. So if these are taken, keep them on a tight leash. And as we've just seen, the overnight futures are popping higher, so leaving it alone is the right thing to do in this case. We've got a similar situation on Uncle Russell. Now, it is flipping over, back and forth, but again, we're in that bullish extreme zone. So what's happening is noting that it's flipping back and forth, but what we would have seen would have been the same initial scoring here, or lack of scoring, to say, hey, you might want to leave this one alone. So that's what we would have seen here, but it's just flipping back and forth. It will update the actual setups, and it'll just note and tell the story of what's going on. But it's basically telling us to reassess this. And again, we already know the market's ripping high, so again, it was well deserved and to leave alone. Crude oil was, again, it was looking good. I woke up to this rally here. We had basically the point and figure break up and out, and looking to be a buy. We saw a retracement back at $81. Now, price did sell off. We didn't get that V-shaped entry before it fell off the cliff, and as we look at your own charts as I'm recording this, it's closer to that 79.50 zone there, but we're still in that potential action zone where we could see price turn around. If we break through that level, then we could push lower and retest the $65 or so level that we spoke about a few weeks ago. Over on crypto is, again, Bitcoin is just stagnant. So one of the things that my buddy recommended, again, full disclosure, I'm a crypto newbie. The patterns are exactly the same, whether we're looking at S&P, the Russell, the Dow. So really what you trade is just personal preference. Bitcoin's just grinding sideways, so looking for something that's actually trading. So we're basically trading from the range high down to the range lows, and we're almost there to that target on, and this is ETH versus Bitcoin. You can trade Bitcoin versus ETH, it's just, this is the one that was available to me on my platform. But yeah, we are moving lower. Again, we are seeing on the point and figure, seeing those lower highs on the point and figure here, and then lower lows as well. So the X's are the rallies, and the zeros are the sell-off. So again, lower highs, lower lows on the crypto, which is what we're seeing here on that kind of flag type pattern. Now, looking at yesterday, despite my opinion, the S&P and the Russell there, so we have our standard setup our opening range on both S&P and Russell. Again, we get a nice clear and clean breakouts on both of them. We rallied strong and hard on both of them for that first hour, and to be honest, I actually anticipated that we were going to grind sideways, so I wasn't really expecting a strong move. I thought we might see gap high trade lower, maybe a little bit of a push up before the sell-off actually happens. So I just got the one trade. I wasn't looking to compound into what turned out to be a trending move. I thought it was going to be very short-lived, very similar to last Monday, which is what we saw last Monday. Now, Russell did essentially grind sideways, a little bit bullish near the end of the day, but they basically grinded sideways after that first hour of movement. Short strikes are noted on the chart there, so profit was locked in. Transformed from credit spread into a butterfly, guaranteed profit floor, and if we had have seen those turnarounds or price just grind sideways for the rest of the day, then there would have been an opportunity to bank some extra profits beyond what I was initially looking for. So $80 guaranteed per spread on SPX, $90 guaranteed on Russell per spread, with a maximum of 580 and 590 respectively. The profit graph on the challenge account looks like this. Again, guaranteed, the price was off the right there. You see the profit tens here, so guaranteed profit floor on both S&P and Russell. So really just waiting to see if there was a turnaround, which has been really common for most of this year. So again, despite my opinion that the market would gap high, maybe move up a little bit and then sell off for the rest of the day like last Monday, the setups were saying, you know what, we're going bullish. So a little bit of caution was applied. Again, I didn't take multiple trades, but the one trade was more than enough for what I'm doing here. Now, I think the lesson here is that I like making money more than I like being right. So my opinion can be right or wrong, and it's great when I'm right, but I'm not bothered when I'm right. I'm not going to do anything different. The new trader is going to have that opinion and stick to it like glue, and then be selling the rally, 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 and being wrong all the way. And before you know it, you've blown a trading account. So it's very easy to have an opinion and then try and trade the opinion. What we want to do is, it's okay to have an opinion, but you want to separate it. Like, what's the data actually say? What are the charts are saying? Well, actually, no, we're still bullish. Okay, so my opinion's wrong. Doesn't matter. I like money more than I like my opinions being right. So, and that's reflected in the wall of wins. The students are once again crushing it. 5 traders reporting 50% return on capital across the board. 2 instruments, S&P and Russell. 1 trader sat out, which is fair enough. And again, the P&Ls, we've got Don, Chris, Richard, James, Eddie. Well done. And if you've not publicly mentioned, I appreciate not everyone likes to publicly post the wins and losses, but well done to everyone who does. If you've not posted in the community, then also well done as well. So quick shout out to Eddie. Decided that he couldn't get the premium that he wanted. The trade set up, but sometimes the premium's just not there. So he looked for an alternative trade entry, which was awesome. Still made a 50% return on capital, which is absolutely awesome. The credit were right. Even I noted when we were doing the live calls, I had to go 1 strike in the money, 1 strike out the money for my at the money or near the money credit spread. And the premiums were still exceptionally low, so they were attractive to Eddie. He did the right thing. He found a trade that made sense. So well done, Eddie. That was a great decision to be made. So as always, I am not smarter than the data. Certainly my opinions don't matter. I just want to follow the process. Because we've got a time-tested, proven process that is data-backed over more than 20 years, I want to engage the brain less so that I gain more. So less brain equals more gain. And if you want to learn a little bit more how to collect morning income or how to collect weekly income, head over to antivestor.com or click the links in the description somewhere next to this video. So that's all for now. Have a fabulous day's trading, and I'll see you at the same time next time on the next video. Bye for now.